Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Our guest today is Dr. Mark Faber, who is the editor and publisher of the Gloom, Boom, and Doom Report, which highlights unusual investment opportunities. A regular speaker at various investment seminars, Dr. Faber is well known for his contrarian investment approach, and we are delighted to have him here today as our guest. Good day, Dr. Faber, and welcome to SBTV.
Well, thank you.
Let's start with trade wars. If I were to type in trade wars in the Google search engine, I will still find things like Trump's trade wars, U.S. trade wars. It's been there for quite some time. But
Yes.
earlier, yeah, and earlier this year, President Trump did tweet that trade wars are good and they are easy to win. Your opinion, Dr. Faber, do you think I know. Do you think trade wars are good? I can tell your answer by the laugh already. But do you think trade wars are good? And if there are any good reasons why President Trump would want to continue to impose tariffs on imports?
Well, first of all, the question is philosophical in the sense is a war good because
Yeah.
it's easy to win? I don't know any war that was easy to win. Uh, they were
Good point.
started because maybe people thought that they're easy to win. Like if you look at the superiority of the US when they went into Vietnam compared to the Vietnamese army, they thought it's just a picnic. And
Yes.
the same they thought about Iraq and about Afghanistan. And each war starts because of the perception that's easy to win.
Mm.
And then the war goes on. And then the aggressor believes that, well, we'll have to stay there and wage the war a little bit longer. And at the end, they realize this war cannot be won, period. Then they retreat and get out somewhere or don't get out, and it becomes very costly. And the trade war is similar in the sense that there's no absolute winner. There's only both losers. But in a trade war, some people will lose more than others. It's like in a military war, some people will lose more than others. Now, the question is, how do you measure the losses compared to each other? In a military war, the losses can be on one side a lot of people, but on the other side is very costly monetary wise. And in a
Yeah.
trade war, I suppose that there are relative winners and relative losers. I would only wage a trade war if I were 100% sure that I would win it.
Yeah.
And as someone who has studied and so forth, I would say you're never 100% sure about anything in life. So I think
I agree with that.
compromise would be an easier option than waging a trade war, especially because the perception in the US is, well, the Chinese have benefited greatly from trade with the US.
Yeah.
But I could turn around and say, well, that is not entirely true. What has happened is people in sweatshops in China originally, now these are modern factories, but they worked like crazy, sometimes 12 hours a day on assembly lines, and they produced goods, say a Nike shoe. They sold the Nike shoe to the US for $10. That's the cost of production. And the US, through markups and marketing fees and so forth and so on, finally sells the product for $100.
Right.
Now you tell me who wins through that process. Number two, the Chinese, it is true, they have a large trade surplus with the US, and the trade surplus has increased. However, the Chinese export goods to the US. The US is very good at exporting cash, treasury bills and treasury bonds, and assets, real estate, stocks, bonds to China, which the Chinese are buying. So I don't know. I mean, up to now, I would say on balance, the US has benefited. But macroeconomically, in the US, the employment has not generated higher wages. That is clear.
Yeah.
Whereas in China, they started out, as you know, the opening of China was in 1978 and not much happened until 1990. But if you went to China in 78 or even in 1990 to most provinces in China, China was completely underdeveloped. And now many Chinese cities are modern cities with a great infrastructure, certainly compared to US cities with their infrastructure that is crumbling.
Yeah, that is true. We're falling apart in more ways than just the infrastructure back in the U.S. And there have been
Yes.
some pretty terrible picnics lately that we've been a party to. But these trade wars, do you think they're good for businesses, or do you think ultimately it'll hurt business?
For sure, trade wars are very bad for business.
Yeah. Okay.
It's like a military war is very bad for business, but it is good for a few businesses. Like a military war is very good for the weapon industry and for some parasites that know how to exploit war profits. In every war, there are some families that became very wealthy because of the exploitation of the war, but at the cost of the entire economy and of human lives and so forth. And in trade wars, I suppose some people benefit, but not many. And if we look at economics, what is the essential objective of economics? The objective of economics, and in theory, our profession as an economist, I say that, is to create wealth for as many people as possible, and not just for a handful of people.
Right.
And that is the negative side of trade wars. And I can tell you, in my opinion, the US is in no position whatsoever to win the war. I would say, whereas Trump, in his ignorance, thinks that he can win a trade war, I'd say the US for sure will lose the trade war, for sure.
Yeah. Okay, Dr. Faber, let's say okay, there's no tariffs at all anymore. But even still, if there were no tariffs, would the U.S. be able to compete with China today or tomorrow?
Well, first of all, it's a misconception to believe that everybody has import duties and the US has no import duties, and that everybody subsidizes industries and the US does not subsidize industries. That's a big misconception. The US subsidizes most industries, including agriculture, and they have import duties as well as making things difficult for foreigners to actually do business in America. But that aside, I'd say if we had completely free trade, no restrictions whatsoever, I think the US could pack up economically. They would have no chance, quite frankly.
Okay.
Because nowadays, there are so many industries that will just not come back in the US. You understand? They've been gone. And number two, even if they wanted to go back to the US, these companies would find it very difficult to actually hire people that are qualified. That is the problem of the US. And it goes back to the monetary policies of printing money
Mhm.
and of the fiscal policies that have always encouraged consumption at the expense of actually capital spending. As a result of this overconsumption, it's natural that the US had a trade deficit. If it hadn't been with China, it would have been as in the 70s with Japan,
Right.
and so forth. So I think that actually, if anything, if there was completely free trade, and believe me, this is not the objective of Mr. Trump, completely free trade, nor of his advisors Navarro and of Larry Kudlow.
Mm-hmm.
They are interventionists and protectionists. They don't want entirely free trade. This is a pretext to justify waging a trade war that they say, well, we want to go to a free trade, but in actual fact, they don't want to have a free trade.
Okay. Yeah, I remember growing up back in Hawaii, a lot of our toys were made in Japan. Then we saw made in Taiwan. Then we saw made in China. But I'm going to put you on the spot here, Dr. Faber. If you were the president of the U.S., I don't know if you'd ever want to be, but what would...
I doubt. I'd rather be the president of China.
Okay. But hypothetically, if you were the president of the U.S., what would you do to help reverse the trade deficit?
Yes, that is a good question. But first, analyze what caused the trade deficit. You understand? We can't address the symptom in a sickness. We have to address the causes of the disease. The cause of the disease in the US is clearly overconsumption. And this has been due to essentially economic policies that go back to actually pre-Keynesian economics to stimulate consumption. Whereas in other countries, they have produced economic policies that actually stimulate capital formation, capital spending. And this emphasis on consumption then leads to overconsumption. And a trade and current account deficit is a symptom of a country's overconsumption. There are cases of a trade deficit in young countries, such as you just brought up Taiwan, and I'd also like to mention South Korea. At the beginning of the industrialization, these countries imported a lot of capital goods because they didn't have the capital goods to manufacture gloves and toys and whatever you just mentioned. And so the trade deficit was due to the imports of capital goods. But that's not the case in the US. And certainly they don't import a lot of capital goods from China. They import capital goods from Europe because the quality of machinery in Europe is vastly superior to what they have in the US. That is the difference. So the analysis of actually what leads to a trade deficit is very important. And I'd say the only medicine that actually would work in order to reduce the trade deficit on a permanent basis in the US would be a reduction in consumption. In other words, a recession, you understand? But that the US doesn't want. They will continue to print money. And this whole thing about raising interest rates, they will increase interest rates, but the moment the stock market is down 10, 20%, and the moment the economy slows down, they'll print again money. And so even if the US has large import restrictions, huge tariffs, say 100% tariffs on all the goods that come into the US, they'll still have a trade deficit. Plus, as you know, there's something called smuggling. At some point, smuggling increases.
Do you think the U.S. is empire in a decline right now? Can they ever come out of it, or are we seeing some type of a restructuring of the United States?
I wrote a report about 3 years ago about the US becoming a banana republic.
Oh,
A banana republic is characterized by a country that has a very narrow elite. In other words, there are some very wealthy people, there's some very well educated people, but the masses are uneducated and their standards of living are actually going down. And the US, if you look at the pattern of the US economically speaking, whereas you live here in Singapore, I can say that in the last 20, 30 years, the standards of living of every Singaporean has gone up. Some, of course, more than others. But say, I'm always amazed when I travel to Singapore and I go into a taxi and we talk and they talk about their families and so forth. They all complain about high taxes and about the government grabbing too much. But then you ask them about their children. Yeah, their children are all at university or in a good school and so forth. So in general, if I look back at the first time I went to Singapore is 1973. The same for the first time I went to South Korea, Taiwan, Japan, and so forth. The progress in Asia is simply very visible, even to someone who is economically not clever. He can really see that Asia has developed immensely for the majority of people. I'm not saying that everybody's better off and so forth, but most people are. You know, you travel somewhere, you look at an airplane, how many Singaporeans there in the airplane, how many Hong Kong Chinese, how many mainland Chinese, and so forth. And this didn't exist 30, 40 years ago. And so I can say the standards of living have been going up, but I'm sorry to say the standards of living in the US for the majority has actually not been going up, but actually rather been going down. I'm talking for the majority, not for a handful of people. And in Europe, the standards of living of most people are flat. They're not improving, but because of someone has to finance the socialist states, the standards of government have gone down. In other words, the credit rating of an Italy, Spain, Portugal is essentially nowadays a disaster.
Dr. Faber, we talked about some countries in Asia, China, Japan. These two countries, they hold quite a bit of U.S. treasuries. How do you think they're going to manage their holdings in the years to come?
Well, I mean, this is a very good question because everybody holds US dollars, not just Japan and China.
Yes.
Every country that essentially has had trade and current account surpluses has accumulated reserves, and some of these reserves are very large. Like, you know, some people talk about an Asian crisis like in 97, 98.
Yes.
This is essentially a nonsense because most Asian countries nowadays, they don't have current account deficits and trade deficits. They have actually surpluses, and they have huge reserves. As an example, Thailand, on a per capita basis, has larger reserves than China, because the Chinese population is, say, 1.3 billion, and the Thai population is, say, around 70 million. So on a per capita basis, they have a lot of reserves. Same for Singapore and same for Hong Kong and so forth and so on. But anyway, you and any wealthy person in Singapore and myself, we also hold US dollars. Unless someone is very bearish about the US dollar and then he holds other currencies. But then you can turn around and ask me, well, if you don't hold US dollars, what is better? The Turkish lira, the Brazilian real, or the Argentine peso,
Tough choices.
or the South African rand. And so then you turn back and you say, well, all currencies basically, and if you look back at the period, the 70s, how much assets were worse? Real estate, stocks, bonds, commodities, precious metals, collectibles, and how much they're worth today, then we can agree on a statement that would say the purchasing power of paper money has lost against the value of assets. You know, we had higher consumer price inflation than what the governments publish, but what has especially gone up in value against paper money are assets, real estate, stocks, bonds, and so forth. And so we can say, whereas assets were inexpensive in the early 70s and early 80s, and we can measure that very precisely if I look at, say, the market capitalization of the US stock market, or the value of US stocks compared to GDP in 1970 and what it is today. I can say at that time, I, as an income recipient, as a worker, I could buy one Dow Jones with, say, 25 hours of work. And now I would have to work 150 hours to buy one Dow Jones. So relative to wages and relative to the purchasing power of money, stocks, bonds, and so forth are expensive.
Okay.
And so this is a dilemma everybody is confronted with. What do you do with your dollars? You understand? It's not just the Chinese central bank and the ECB and other central banks that have dollar reserves, and then they say to themselves, well, what do we do with it? A lot of central banks, especially the monetary authorities in the Middle East, created sovereign funds, or Norway, or Singapore has a sovereign fund, and even Hong Kong, they have some funds that are run by the government. And then some of them, they will invest of these sovereign funds, they divest out of cash into stocks and real estate and bonds and so forth, and then they diversify into different currencies. But basically, as long as we have the US dollar as a reserve currency, and I think it will change, the bulk of the money is still in US dollars. And if the Chinese decided to move all their funds out of US dollars, then what would they move it into? Into yen at zero interest? They could move it into stocks. But the money is so large that they would find it difficult to actually acquire companies around the world or shareholdings without arising some tensions again, because the foreigners would say, well, we don't let you buy Coca-Cola, we don't let you buy GE, right, we don't let you buy United Technology, and so forth and so on. So that is one of the problems that has, if we really analyze the cause, it has been created by central bankers.
Okay. You mentioned the dollar being the reserve currency. How much longer do you think it can continue to be the reserve currency, or maybe more, maybe more important? I know it's kind of laughable already, but what do you think would replace it? Because I think that's a thing that people are looking at, because we all do realize the dollar, its days are coming to an end at some point.
Yeah, every major currency in the world, whether it was Roman dinar or Aureus or whatever it was, or in the Middle Ages, the Spanish currency, Cruzeiro, and so forth, all these currencies that served as kind of a reserve currency, or you could say they were generally accepted currencies.
Right.
All these currencies eventually vanish, and the last one, we had essentially a trading system around the British pound until after the First World War. And all these things change over time, and there's no question that eventually we'll have another system than the US dollar. And the question arises, what kind of a system will we have? It could be worse and it could be better. I think looking at essentially the way people behave, we have essentially the dictatorship of professors. And I'm saying that because the central bankers have become immensely powerful. Essentially, even though Trump is running the US government, he has to rely on the central bank to actually print money, otherwise the whole system collapses. So they have become a bunch of very powerful people, and people of that kind of privilege, they will not give up the privilege just like this. They will put up a fight and make it very difficult to change the system. But eventually it will happen, and the US, that we have to see very clearly. And this is why I'm saying Trump's trade war is a losing proposition, because when you really think of the reaction of foreigners, especially the Chinese have an important economy nowadays. You may criticize the Communist Party whatever way you like, but the fact is the people at the top of China are usually very well educated people. These are not peasants. And they must scratch their heads when they listen to a fool like Mr. Trump telling them what to do. I mean, this is something that they will not forget, nor will other Asians forget that Trump is essentially a hip shooter, like you see in the Western movies, and occasionally you hit something. And, this whole approach is very negative, whereby I'm saying this because I would have voted for Mr. Trump. I would never in my life vote for anyone coming out of the Clinton family. But never. But you can vote for someone and still be critical of that person. I think he's done a lot of good things in the sense that he has scaled back the socialist programs that are underway in the US and that were essentially begun by Mr. Clinton and later pursued by Mr. Bush and Mr. Obama in particular, and the increase in regulations and increase in laws in the US that actually is like trade restrictions. They are good for certain people. Certain people, interest groups, they benefit from them, but the majority suffers.
Yeah, we're supposedly the freest country on earth, but yet we seem to have the most laws. But Federal Reserve, traders are guessing there's a 92% chance that the Fed will raise another 25 basis points, possibly even another 50 basis points by year's end. How much further do you expect that the Fed can hike the rates before the economy starts to unravel?
Well, I think the economy has already started to weaken. If you look at the housing market, if you look at the automobile market, these are two important industries, and they are kind of weakening. And the Fed has now a problem on its hand, and this is the inflated asset markets. You understand? As I brought up before, in the 70s, the stock market value as a percent of the economy was, say, 25 to 30%. throughout the 70s. Now it's 150%. So in the 70s, if the market went down 20% or 50%, it was a small part of the economy.
Yeah.
It was 50% of 30% of the economy. But now 50%, it's 50% of 150% of the economy. That would kill the economy. It would produce the depression. The Fed knows that, but they don't know what to do about it. The answer is, and this is also the answer of the ECB and the Bank of Japan, the answer is basically to bail out the system with money printing. Money printing, a central bank goes out and buys assets. In the case of the US, mostly bonds, but in the case of Japan, as you know, they also started to buy equities. So when you think it's true, at the end, essentially central banks could own most of the assets in a country. And then we have achieved socialism in a, let's say, elegant way, because the less elegant way is expropriation. This way is a silent move into socialism that the majority will not even detect.
That's a good point. You mentioned how the Fed is buying up all these assets. There's a term, the everything bubble. Would you agree that we're in this everything bubble?
Yes and no. I mean, some asset markets have been in bear markets for quite some time, and some stocks have been in bear markets for quite some time. So if you look, say, at commodities, they had a huge run-up between 1999, and I'm generalizing here because some bottomed out in 98 and some only in 2000, and then they rose some until a peak in 2008 and some until 2011, like precious metals. And since then, essentially, commodities have performed poorly. Some of them have rebounded. But in general, if I look at the price of commodities compared to, say, equities, then commodities are very low. Yeah. And in a period of monetary inflation, you have to get used to essentially look at everything relatively speaking. You can say, okay, this is cheap, but maybe it's not cheap, but it's relatively cheap compared to something else. Like I could turn around today and say, well, if I look at stocks around the world, the US stock market is at an all-time high, and many Asian markets are down 20% from the peak. Some are down 40%. So it's all relative. Then I can say stocks are expensive, but maybe relative to bonds or European bonds, they're cheap. Maybe someone else will make a different case. But I'm just saying, in general, I would agree with the statement that most assets are expensive. I mean, when I grew up, it was unheard of that someone would pay for a painting more than $1 million. There were some, but these were museum pieces, like maybe Mona Lisa and so forth, or a Rembrandt. But even a Picasso, you could buy a Picasso for $50,000. And now some of these paintings, they go for hundreds of millions of dollars. And I have no doubt that in the foreseeable future, say maybe in 5-10 years, there will be a piece of art that will sell for $1 billion. Yeah. When I grew up in the 70s, I was studying at that time and started to work. there was actually one or two billionaires in the world. Jean-Paul Getty, Mr. Ludwig, he was a German in shipping, and maybe the Rockefeller family. But that was it.
Wow.
And nowadays, how many billionaires there are? Thousands. It's a monetary inflation. I have a book, The Penniless Billionaires. You know, like in Zimbabwe, people, everybody has a billion, but it's worth nothing.
So we have equity is a bit overpriced. Even Nasdaq seems to have quite a few things that are overpriced. Real estate seems to be overpriced. Auto industry is struggling a bit. Student loans, we have all of these things.
Well, real estate, again, you know, we have to be very careful. In general, I agree. But say 5 years ago, real estate in Vietnam was not expensive. Now it's expensive. But I suppose there are areas in India where real estate is not terribly expensive. And, you know, right now there's one place where real estate is very cheap. It's South Africa. You'd be suicidal to buy your farm in South Africa. Or, you know, now in Europe, you can go to smaller villages in Italy, Spain, and Portugal, and even Germany, and small villages in Switzerland in the mountains. Real estate is essentially worthless.
Okay.
But you have to redo the house, you know. But if you have manual skills, let's say, if you know how to build something, you could restore a house and it wouldn't be that expensive. But what has happened in Europe, a lot of small villages, they became economically irrelevant. So people left, they went to the cities to work, the population dropped. And as a result of that, even more people left, and suddenly they were half deserted. And so they will give it to you, provided you live there and you invest there in your house, you maintain it, and so forth. So universally, I'd say real estate is expensive in financial centers.
Okay.
But in the countryside, you know, in London, real estate is very pricey, as well as in Singapore, as you know. But if you go to, say, Malaysia, in the countryside, it's not that expensive.
Right.
It's not exactly cheap. But in general, I would say, I have properties here in the north of Thailand. For what I paid for all my properties, I would get a small house in Singapore or in Hong Kong. A small one.
Yeah. Thailand's a good place. I like it there. But I guess what I was getting at is if all of these things should start to unravel and bubbles start to pop, the question I hear all the time, you know, people are wondering, is this going to look anything like 2008 or quite a bit worse?
Well, I think a lot of people, they owe debts. Maybe for them it's not going to look that bad because they won't pay the debts back. You know, there will be a debt rescheduling. But I believe that if I look back at going back again 30, 40 years, people who have been in the financial service industry like myself and that owned assets, again, like myself, they have benefited hugely. Whereas my employees here in Chiang Mai, the people that work in the house and so forth, their salaries have gone up, but the cost of living have also gone up. The standards of living are probably a little bit better, but relative to the rest of the economy and so forth, they haven't actually progressed much or not at all. So I would say the next crisis will be a crisis in, this is my opinion, other people will have another view. I think the next crisis will hit wealthy people a lot. In other words, the asset holders that benefit, like myself. I'm a beneficiary of the asset inflation, of stocks going up, of bond prices rallying because interest rates fell, of real estate going up, and so forth and so on. So I think people like myself will get hit. Of course, if you're Mr. Bezos and Mr. Bill Gates and so forth, it doesn't hurt your lifestyle a lot if your wealth drops from $100 billion to $50 billion. You understand? These are not people that are highly leveraged. They're not going to go and live among the homeless in Los Angeles or the homeless somewhere in the Philippines. I know the psychology of people, regardless of their wealth. They may be worth 100 billion or 150 billion or 50 billion. If they lose money, they're not happy. It's a bad feeling.
Yeah. Uh, where should people put their especially the wealthy people? Where should they put their money then in order to protect the wealth that they have?
Yeah, it's a good question. How do you survive if the Titanic crashes into an iceberg? You understand?
Yeah.
Before the crash comes, before the Titanic hits the iceberg, everybody may be fighting for the best deck chairs, where there's the most sun and the least wind, and for the best tables in the ballroom at night, and for the best drinks and so forth. When the accident happens, then it's bad. The key is to have a lifeboat.
Yeah.
This is the key, that you have reserved your seat on the lifeboat, and that you actually can find your lifeboat. That there's no point to have a lifeboat,
Yeah.
and when the Titanic hits the iceberg, there's such a confusion that you can't find the iceberg. So I always tell people, yes. Some people will say, well, I hold all my money in cash because I expect a crash to happen. I tell them, yeah, maybe cash is the worst investment if a crash happens, because the banks will be bankrupt.
Yeah.
Cash in Cyprus wasn't a very good investment. So all these things are things you have to consider. And if you can say, somebody will say, well, I hold all my money in gold. But if you store the gold in Switzerland and you live as I do in Thailand, will you be able to access the gold? You understand? Maybe you're not allowed to travel anymore, or you're allowed to travel, but you're not allowed to ship the gold, and so forth and so on. It can also be expropriated, like they did in the US in the 1930s. So these are all things to consider. I would say, if you're a prudent, wealthy investor, you should diversify, because you and I and everybody who thinks should know very well that the world is unpredictable. I mean, it's bad of me to say, because I've been predicting things all my life. It was my business to predict, but I've made some good predictions and some horrible predictions. In general, nobody knows exactly what will happen. So if you have, say, $100 million, I would suggest that you hold some in real estate, and some in stocks, and some in bonds and cash, and some in precious metals. And now they would say, well, hold some in cryptocurrencies. I think this blockchain technology has a future, but I'm not so sure which cryptocurrency will be the leader in future, that the generally accepted crypto. So that I don't know. Number two, it's nice of you to say, well, I hold some money in cash, bonds, real estate, stocks, and precious metals and cryptos. But you also have to diversify in terms of who holds the assets. In other words, if you own real estate, you shouldn't own all your real estate in one place. You should own some maybe in Australia, New Zealand, some maybe, I wouldn't own it in the US, but some people may, and some maybe you want to own in Panama, and some in Canada, and some maybe in China, and some, I don't know, in the Philippines or in Thailand, or as I just mentioned, in some villages in Europe. So then you're very well diversified. It's not the investments that will be optimal, because if you really want to make a lot of money, you have to focus on one thing and stuff all your money into that. But then you also have a high risk. You ask me, how do we survive if there is a crash and so on? So I'm giving you here some options that an investor should consider. In my view, investors don't consider sufficiently what they should invest in if there is a serious downturn.
Yeah, it's good to diversify, but not only diversify your assets, but probably even the location of your assets.
Yeah, sure. Yes, absolutely.
Yeah, it's a good point. It's a good point, Dr. Faber. That's why
you should also have many different wives.
Dr. Faber, there's quite a lot of gloom, but somehow it was unenjoyable gloom. I don't know how you did it, but you managed to put a lot of laughter in that gloom. But before we wrap up, could you let our listeners know more about what you do and how they can find your work?
Well, basically, I started out as a broker in 1970 in the US, and then I moved in 73 to Hong Kong, and I covered Asia for an American brokerage firm, and then for Drexel Burnham Lambert, that was famous for high yield bonds or junk bonds. And then I started my own business in 1990. I managed money for people, and we also provided brokerage services. And I started at the time to also write, actually in the 70s already. And then it became formally the Gloom, Boom, and Doom report, which is a report that goes out to clients in a printed form. And then later on, after 2000, I started the website report that people can subscribe under www.gloomboomdoom.com. And so that's essentially what I do, and I invest money and I advise people about investments, but the main activity is actually to invest money.
Dr. Faber, we appreciate your time, and we appreciate the humor that you gave. It's always good to have some humor. But
it's good. But
yeah,
I mean, look, it doesn't pay to sit at home. The other day, I had a lady come to my office, and she was worried about everything. So I said, look, if you're worried so much about everything, even crossing the road, then you better stay in your bed the whole day and close the door. You understand? Somewhere, everything you do involves a certain risk. I drive motorcycle. It's a risky proposition. Guards are also risky because they may turn on you. Many government officials have learned that, and head of states and kings and queens and so on. So everything has a risk, and you have to go through life with a certain humor. I mean, it's incredible what the central banks have really done to the world. It's unbelievable. But it doesn't pay to cry at home about it.
Yeah.
Sorry, my dogs are barking.
No, I'll even listen to
an intruder. Maybe there's a central banker knocking on the door.
That was Dr. Mark Faber, the editor and publisher of the Gloom, Boom, and Doom Report. For more information of his work and his views on the economy, please visit his website, www.gloomboomdoom.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content.